Very good afternoon, good morning. Welcome to the daily financial source FX section with myself, Giles Cochran. Hope everybody's doing well. You can see my screen and hear my voice. Okay, good morning, TM. Good to see you. Suk, very good morning to you. Just a quick reminder before we get stuck in today's markets. Remember the purpose of these sessions. Hey, Mark, good to see you. Remember, at a high level, there's around 5 core elements to good trading. First of all, the trading psychology. Always need to ask yourself, should I be trading right now? Am I in the right frame of mind? Secondly, need to know the macro fundamental bias. Thirdly, what's the current sentiment? That's very important, particularly for intraday trading. And sometimes that just means recognizing that there is no clear bias out there. Fourthly, technical execution. Keep entries simple, repeatable. And fifth, risk management. Position size, stops, and knowing your downside before you enter. So what we focus on in these daily sessions is elements 2 and 3, understanding the macro fundamental bias, and then finding the current sentiment. And then we look at obvious technical areas where we can take advantage of that. Now, if you're brand new, don't forget, make sure you go through our macro fundamental course because everything we do here is essentially building on that foundation. And in terms of daily preparation, right, there's a few key resources we use every single day. The newsfeed and Squawk, and that's very important for understanding what the current sentiment is. We also use the interest rate tracker so we can see what the probability of interest rate moves are. We'll look at that in light of the latest UK inflation data. We also then will use the economic calendar, particularly the low and the high consensus. That's very helpful for trade ideas, and the volatility tracker as well. Now, they're not currently working at the moment today. Oh, hang on. Yeah, okay, they're loading up there. So the first thing we want to look at on a day-to-day basis is what's going on in the macro fundamental world. And the first news report to look at is this 6:30 daily European opening news. Right. Hey, Lauren, good to see you. And there's a couple of things that are really grabbing the headlines. So first of all, the Reserve Bank of New Zealand did surprise markets. Now, what markets were expecting, because inflation would be a bit higher for the Reserve Bank of New Zealand, markets were expecting the RBNZ to deliver a hawkish tilt. They haven't. And they got a new central bank governor, and that's been seen as a surprise. So you can see here the New Zealand dollar underperforming following the RBNZ meeting. It was the first time it paused in 4 meetings and the first rate decision of the governor Braman's term, so new governor. And they refrained from hawkish surprises, with the committee continuing to assess incoming data carefully and stated that if the economy evolves as expected, monetary policy is likely to remain accommodative for some time. So there was no major shift, and you can see the reaction in the New Zealand dollar was fast. Straight away, New Zealand dollar weakening, and that gives us an obvious Aussie New Zealand dollar buy bias for today's session. Now, if we go along to the Aussie New Zealand dollar pair, a couple of things just to note. Right, so first of all, you can see here on the data, the Aussie New Zealand dollar's pushing higher, challenging those recent highs. Now, if you look at this is a very nice support area. We were looking at that yesterday because what we were looking for is if the RBNZ did give that hawkish tilt we were expecting, we were looking, if you remember, from a move here like that, right? It's no coincidence that that area has become the key area for support, right? Exactly the same zone, because you can see here swing point, breakout, retest. If you look at this here as well, what you've got is you've got a false break of an inside bar, right? So this is an inside bar, not harami because the range falls outside the body of the mother candle, but it's a false break. So that was a bit of a tell ahead of the data. And that would have meant that if you were there seeing and trading it, the nose of that candle would be a really good hot zone for potential longs, right? That's the sort of thing you would have had 12, 13 point stop on that if you could have got into it. Now, I'm asleep in the land of Nod at that time. So the entry for a retracement, there's 2 potential areas. So first of all, looking for a retracement back to that area at the 11731 does work as a potential hot zone where you could try, right? Just give it about a 12 point stop, try up to 3 times. if you get back to that 1.1732 region, right? I don't think we're going to get back that far. So looking at it, and if we just have a look at the yield spread between the Aussie and the New Zealand dollar, right? Look at that. Do you see the way the yield spread's just reaching higher? Right, so the yield spread is taking out the highs. So we're expecting the Aussie New Zealand dollar pair to keep moving higher with a potential to retest that swing point and push up. So what I'm looking for here is an alternative entry rather than that 31, just back down to this swing point here. You can see you've got swing, swing, swing. So we're looking for a retest of the 1.1752, right? And you can look, I put a 9-point stop on it, try up to 3 times. That's reasonable. And take 50% off, right? If and when you hit up to the recent highs, and then leave it to break even. So that's what to look for the Aussie New Zealand dollar. Okay, so that's trade opportunity number 1. Little recap on the euro pound trade yesterday. Remember, we were looking at this and we were looking at this very tight trend line break for a potential long on the swing trade. Now I'm still trying to hold this to 8,800, right? We'll look at the UK's inflation data at the moment. So I've got this swing trade still running. But what you can see here is that trend line break. Hang on, folks. Sorry if my chart just froze. Let's try it again. Here we go. You can see here that trend line break. And on balance volume was pushing up higher at the time. That's my indicator's not working at the moment. And you can see we're retesting that broken trend line here. So breakout retest with a trend line break moving high. And that worked out. I don't know if anyone got that yesterday, but we were talking about that. If we had very weak inflation data, that would have been up at the 8,800. Inflation data has been a bit of a disappointment in terms of what was expected. So we're seeing a little pullback in the pound this morning, a little bit of strength. I'm going to try and hold it, given the fact that the yield spread remains pushing up. Yeah, nice TM. Well done. I'm glad to hear you got that because that was the way to play it. I remain in the swing trade. And if you look at this, you've got a bullish bar, right? Rejecting this channel, and you've got closing above these highs here. So this becomes a breakout retest zone here, essentially. That's really what we've got. Not unreasonable to go 724. It's not unreasonable to have the 724 as an alternative entry here. So let me just see it. So essentially that could be re-entered here at market at the 18, right? With a 5-point stop. So it's not unreasonable to have this. I'm just going to take my swing position out just for clarity. But another alternative is here. Just up at these highs, right? With a 5-point stop. Let's just put a new position on totally. That's getting mixed up. So that's not unreasonable there. Technically, that's quite strong. 5-point stop could try up to 3 times at this level. Okay. The outlook still remains that the Bank of England may be cutting interest rates in March. So although the inflation data has come in, if we just have a look at the news feed, you'll see the data came in after the morning data, right? On one hand, the data is on balance unlikely to push the BOE towards a March cut, right? Particularly given Governor Bailey's emphasis on inflation. But the headline rate still moderated significantly from the prior. You see it's down significantly. Where is it? It's see where the headline rate still moderated significantly prior and keeps the inflation trajectory on track to return to target, which alongside the dovish unemployment wage series, which we had earlier in the week, right, argues in favor of a March move. So if we look at interest rate markets, you see there wasn't much of a reaction to the data, but you can see that it's still tracking lower after the data. So it hasn't, changed the outlook at all. And as it currently stands, as short-term interest rate markets now see 94% chance of a Bank of England rate cut. So on balance, that should keep the euro pound buy bias in play, right? So a sort of low risk, high reward way of getting into that would be here, right, at this market point, 5 points, try up to 3 times. And notice that the nice thing about this is what you've got. You've got this sort of pin bar, inside bar structure breaking out, retest. That's a natural support area here, technically. Okay, and you see it's not too far off from retesting that broken trend line on the break yesterday. That's the second trade outlook that we have for today. Euro pound 5-point stop there at market, and the Aussie New Zealand dollar looking for a pullback to that 1.19-point stop, try up to 3 times. So they're the two outlooks. Yeah, don't ever worry, TM, about that, right? The only time you're going to get left out is if there's a shock interest rate move, and even then you'll get something later on. So don't worry. Okay, we'll look at that in a minute or so. Yeah, yeah. Do we see the New Zealand US dollar moving to the downside in the near short term? The issue with the New Zealand US dollar, it's obviously going to be dollar dependent. And the outlook for the dollar is a bit mixed. The major data we got for the dollar coming out is on the end of the week on Friday with the PCE inflation data. And today we've got industrial production. Is it a big mover? No. We've got housing starts number. Is it a big mover? No. We've got geopolitical risk with Iran over, in the negotiations with the US. So I haven't got a clear vision for where the dollar's going to be going this week. It could just be choppy and range bound. And technically, there's reasons for dollar weakness technically. If you just take a look at this, you see this firm break. Has it broken out of this area? Yeah, it's holding above this trend line, but there's a break of that inside bar structure. So we are still bullish, right? But there's also some bearish signals out there. So it's tricky. So in terms of what does that mean for the New Zealand US dollar, it could be quite choppy. And if you look at the Aussie US dollar, that's clearly trying to put in a reversal, isn't it? And if you look at the euro dollar, right, now you see, that's a slight divergence from the Dixie, because the Dixie has the close underneath that breakout level. But if you look at the euro dollar, we're closing back in. So that is indicative of higher prices. So TM, my take on the dollar is this, that I'm looking for a technical retracement. Not that I'm bullish euro dollar or anything like that, but I'm just looking for a technical retracement. So for me, it's the 11840, right? 5 points. I'm going to try 3 times at the 1840, which is saying that this hammer reversal bar, right, is going to play out. Now, if you look at this from a technical perspective, we're just retracing now, right, from yesterday's hammer reversal bar and hit the 50, right, retracement level. Now I've bought in from the 50, right, and I'm going to buy in again from the 40. Very small position that I bought in, larger position if I go through the 40 with the 5 points. I see technical signals for some dollar weakness, but I see some macro sentiment for dollar strength. Is it strong either way? No, not really. Right. So that's where I'm at with the dollar. So as a result, I would prefer the Aussie New Zealand dollar because of the interest. If you look at the yield differentials between the RBA and the RBNZ, right, that just gives me much more confidence. Do you see the yield spread? Right, it's clearer TM in my mind. Now, okay, if you suddenly see reasons for dollar strength coming in, then New Zealand US dollar selling, yes, that's what I'd say. And I know that's a bit of a long answer, but I hope that's helpful. So we've got euro pound upside. Yeah, we'll look at that. I haven't forgotten that US dollar CAD I'll show. We'll look at that in a minute. I just want to get through some of the other things first. Then we've got, that's jumping out, to this Dixie, slight gains, mixed performance. FOMC minutes are coming later today. So what's expected is those FOMC minutes are expected to indicate that the Fed's staying on hold. So that in theory should keep a little bit of underlying dollar strength going on, right? And the FOMC minutes should add a little bit of dollar strength. So just be careful of the dollar strengthening later in the session. That's the first thing I'd see here. Then the other thing that's jumping out at me is stock. US cash equity open. The Mag 7 sell off, but then pulled back through the afternoon. I know Nadjem had a nice chart here on the Mag 7. There was a little bit of recovery in US stocks. We got some people saying the recent sell-off in the tech bear market is unwarranted for Apple. And this is going to be the year that Apple gets into the AI game. A lot of pressure on tech stock remains. And every now and then, anything negative for tech news, investors just coming in and selling tech stocks. With that being said, there is a nice reversal pattern on the Dow, just picking up here. You can see stocks positive on the session, volatility pushing low, Royal Britannia, FTSE 100 making fresh highs. And if you look here at the Dow, right, what you've got here is a minor break of an inside bar. So technically, I see another opportunity here in the Dow for this, just using, like I'd say, like a 30-point stop, right? Try up to 3 times here on this area based on the minor false break of an inside bar, right, from a support level. Now, Osho's long dollar CAD. So let's look at that. Now, we had the CAD inflation data, didn't we, out yesterday? And there was a little bit of weakness in there, if I remember. Let's have a little look. Yes, the CAD inflation came in. The trim, that's the Bank of Canada's preferred measure of inflation, looked 2.4%. So significantly lower. Year on year lower, month on month lower. So on balance, inflation is weakening, which gave the CAD a slight sell bias. We've also seen some weakness in oil markets with the US-Iran deal supporting downside in WTI and Brent, right? Again, another reason for CAD weakness. So if you just have a little look at the short-term interest rate markets, let's see if that changed the expectations much for the Bank of Canada. Not massive expectations, still expecting it to be on hold, but you can see current expectations are slightly lower than a week ago. So a little bit of a shift, justifying a little bit of CAD weakness. If we then look at the news feed and we go back to yesterday, yeah, we didn't really get much coverage on there. So I'd say, is a dollar CAD buy bias legit? Yeah, it was legit. Should you exit or hold? Let's now have a look at it technically. There's nothing there massively to say that the EuroCAD's going to go one way or the other. It's nothing massive there, right? So let's just have a little look what we see. Just going to have a quick technical rundown. So on the weekly, you got a minor break of a Harami inside bar from support. Right, that is definitely bullish. On the daily, we've had 1, 2, 3, 4, 5, 6 days of buying. So we're definitely bullish recently. On the hourly, we've got this trend line just breaking here for the first time, a retest and a sell-off. So for me, being long the dollar CAD since yesterday, see technically what you notice is a break of this potential of this trend line, retest, rejection. So where can you, let's have a look if there's a place where you've then got this near-term resistance here, haven't you? Yeah. Okay, thanks, Mark. So Mark's pointing out that the divergence on the day that the buys in the futures market, Mark, for the CAD. Yeah. So what Mark's pointing out is that the delta is picking up in the futures market for the CAD, right? So that's trying to bottom in here. Yeah, thanks, Mark. So there's bullish interest, but technically, you see where you got the problem you got. So you got a technical break to the upside. See what I'd be inclined to do. I know it's tough, but I just bring it up. Can you bring it up under the 136.50? Because I think if that's going to hold, right, you're going to want this to be a failed hammer reversal, essentially, which is saying I'm believing in more dollar strength in line with what we're seeing here in the Dixie. Really, what you're trading is this break of a symmetrical triangle pattern to the upside. So I think, given the fact that you're long on it, what I would do basically, if you stay above this level here, you'd expect buyers to keep in. Get underneath it, you'd expect sellers to come in. So it's geopolitical risk as well, Osho, because if you get like negative news for the US-Iran talks, then all of a sudden oil will pick up, which will strengthen CAD, which will send the dollar CAD lower. So I think like the tightest I could bring the stop up would be here underneath the 1.3647. And it's underneath that recent swing point. That's what I'd say. Osho, I wish I could be more helpful. The only other thing we'll do is we'll have a little look at the yield spread, see if there's anything there. Just going to do it on a different chart. Yeah, there's nothing massively there. Yield spread sort of trending lower in the near term, but you can see it's trying to pick up at the moment. You got the rejection of the 200 exponential moving average, so you're in a massive support area here. So structurally, stops underneath the 13467 makes sense, but I would want to get that risk right down. The other option is to say, okay, lock your stops in there, and then go long above those highs with like a 7-point stop, try up to 3 times, and then if you get bullish FOMC minutes, go long up like that. That's probably the other. Yeah, I'd say Osho because it's well, it might work out, right? But there's quite a few risks around with it. Is there any clear drivers for the dollar? Not really, not until Friday. Is there geopolitical risk? Yes. Will that impact oil? Yes. Will that impact CAD? Yes. We've got the FOMC minutes tonight as well. So there's quite a lot of risk for the dollar CAD and quite a lot of unknowns. Definitely lowering the risk would be my take on it. Lovely, guys. It's been a pleasure. Look forward to seeing you in the futures later. There's giving us plenty to get on with there. Got those euro pound outlooks, got the Aussie New Zealand dollar outlook, and got the euro dollar outlook as well. Okay. Yeah. Cheers, Mornay. Cheers, Lauren. Thanks for the futures heads up, Mark. Very helpful. Have a good day. Thanks for showing the dollar CAD outlook, Osho, as well. Cheers, guys. Bye for now.